Hello traders, welcome to today's installment on this YouTube channel, and in this video I will be briefing us on how I do my top-down analysis, or how we as a community of smart money traders can do a top-down analysis from a higher time frame to a lower time frame. This is going to be my first video, my first installment on top-down analysis, and trust me, this is just the tip of the iceberg. So there are many ways, many refined ways on how we can approach the market with the top-down analysis. This is just going to be my first installment, and more videos. I'll be releasing more content of this such in future time. So stay posted, and make sure you subscribe to the channel and hit the notification button so you get you stay posted when I post these videos. So let's hit the chart. So it might interest you to know that this is a live chart and this is a daily chart, and as a Foresight trader we'll try to predict price beforehand, and with the help of a lot of backtesting we can foresee with signatures that repeat over time, over and over and over. We can see signatures that repeat over time. So in this chart I just highlighted a trend, a downtrend, and a pack of liquidities that has been built in the daily time frame, and now I'm just watching the current market price. The current market price is what I highlighted with the gray box over there. So this is what I do. I first look at the current market price and see how it is actually moving, and you can see it is moving to the upside. It is trending to the upside. Now, as a smart money trader, we don't stress the market. We only look at what market has done in order to predict where it's going. Now this is an order block I am highlighting. This is an order block. And why is it an order block? When the market is trending to the upside, we shouldn't see down close candles being traded into. Now I've scaled down to 1 hour time frame to see how market has traded into the order block, and now this is market currently at the order block, and you can see successive higher highs and successive lower highs in the market. Now I'm going to highlight the draw on liquidity on this higher time frame, which I have just done. This is the draw on liquidity, relatively equal highs. Traders will see this as a double top, a resistance. They will see it as a resistance, and they would like to sell because it's a higher time frame resistance, 1 hour time frame resistance. They would likely want to sell into that high, and you know, the market knows what retail traders would like to do, or understands their logic. So people will see that as a strong resistance, and they will want to sell when price goes up into that area. And you can see the market is actually rewarding them. It's actually rewarding them for a while. You can see the minor drop, and now you can see the market has created a relatively equal highs over there. And now this is the first high, and that is the second high. This I'm trying to adjust the high properly, and yeah, there we go. So remember, our bias is bullish because the current market price on the daily time frame is trending to the upside, and we can see pack of liquidities that has been made, or that has been built from the daily time frame when we drew the trend line. So we're expecting price to possibly trade into those areas of liquidity, though it is a high resistance liquidity round, but we expect price to trade into those areas. And now the market has created an equal high over here, we expect price to take out those equal high, because it is deceiving or tricking traders to place more sales in this area. So now I'm looking for the signatures that I can see from the 1 hour time frame. You can see I am checking for imbalances that has been filled in the market, imbalances that was created that has been filled. This is the current swing of the market. You see this 3 candles formation, and which I made a video in the understanding liquidity 102. If you haven't watched it, you might want to go back and watch it. So these three candles created an imbalance. I'm trying to highlight it over here. This is the first the lower boundary of the fair value gap, and this is the upper boundary of the fair value gap. You can see how price traded into that area handsomely. It's traded into that area and displaced even higher with the next candle. This is it. This is the candle. It's displaced higher, and so we would like to see actually in a lower time frame what has really happened over there. So I'll scale down to a lower time frame, 15 minutes time frame to be precise. And now we can see that this was the imbalance that we highlighted on the lower time, on the 1 hour time frame, and we can see that that area, that price, that fair value gap price traded into actually created another block. Okay, this is the other block over there. This is the change in the market narrative, the last bearish candle prior to the move. Well, that's not the definition or the meaning of another block, but for this case, for simplicity's sake, I'll try to explain it like this. So you can see price traded into the other block, grabbing a short-term high, short-term low. Okay, market grabbed a short-term low and displaced. Now we'll expect to see price trade above, start moving higher, because it has not only grabbed a short-term low, it has traded into an order block that actually filled a fair value gap, and now we're expecting higher prices. Okay, the higher prices, we're expecting price to trade into that relatively equal high that it has created. This is the short-term low that I'm telling you about. This is it, short-term low that of the liquidity that was grabbed, and now we're expecting to see price spike to the upside. And remember, this is a live chart, you can see it. Okay, now below the order block should be where my stop loss should go below the order block over there, you can see, and my entry is at the first line that I drew just there. That should be my ideal entry point. So I would like to use the Fibonacci retracement to show us that price is currently at a discount. So I'm trying to modify my fib, so just trying to leave only the 50% retracement and 0 and 100. These are the three important levels that I consider when using fib to check premium and discount. So 50%, anything below 50% is discount, anything above 50% is premium. So this is the price swing, and this is the first price swing, and you can see that price couldn't close below 50%. It traded into it but couldn't close below it, and now this is the major swing, and you can see that current price is at a discount. So now, which actually shows that our trade, we are in line with our trade is probable to actually go higher. But you know, market is 50-50 and is all about probability and possibilities, so nothing is guaranteed. We're just trying to strengthen our edge and look for signatures that could, you know, strengthen our morale to go into the market. Now you can see a relatively equal high on a lower time frame, which actually is in correlation with the relatively equal high that is also in 1 hour time frame. So this is a confluence of liquidity pool. So now I'm very confident that price will likely push to the upside and grab those liquidity that is above there. So some retail trader would like to sell at that relatively equal high. Okay, they will see it as a strong resistance. I'm only measuring the risk to reward, and you can see the risk to reward is perfect. So some retail traders would like to sell at the relatively equal high over there, and you know, who knows, they might be right, but majority of the time, based on statistics and how I've tested the market, they will get stopped out, and because they are trading against what the market is actually pointing at. So that is it. So this is our chart, and we can see how price is actually skyrocketing to the upside, and it is rushing to the pool, the liquidity pool that is up there, as if something is actually pulling it to the upside. We can see, and this is not magic and this is not rocket science, it's just understanding market. So yeah, I just paused the video in order to come back and show us the work in progress, and I'll come back to deliver the whole results of the trade, and possibly it would trade into our desired area, which is the relatively equal high on this lower time frame and also on the higher time frame. Yeah, there we go. So we can see that price or market actually traded into the relatively equal high which we had on 5 minutes time frame and also on the 1 hour time frame. And just a quick recap, on the daily time frame we identify series of liquidity pool, and we examine the current market price, which is the region I highlighted with the gray box, and here is the liquidity pool, which is the low resistance liquidity run. We can't see any imbalance, everything that is there is efficiently delivered, so price is likely to just go above there. So we examine the current market price and scale down to 1 hour time frame. In the 1 hour time frame we also examine the current market price, what market is actually doing at the moment. Alright, so we saw this order block from the daily time frame. Alright, and we saw the market has traded into the order block nicely and started reacting to the upside. Alright, and we scaled down to 1 hour time frame to see what market is actually doing, and we can see also the market has traded into the order block, the daily time frame order block, and it is making successive higher highs and higher lows. This is the line chart, and you can see making successive higher highs and higher lows. And we needed to identify what market is actually doing, and we saw this pool, liquidity pool, on the 1 hour time frame, which is the relatively equal high, a strong resistance which price has actually reacted from, which has induced traders to sell. Alright, traders will see this as a strong resistance that would like to sell, and price has actually reacted to the downside, which is inducing them to sell more. So, but as a smart money trader we think the other way, and we're only looking for buy. Okay, now we scale down to a low time frame to see other price signatures that we can identify. Price is making successive higher highs and higher lows in the lower time frame. Okay, so we needed to identify the current price swing and see what price has done. We saw an imbalance that was created, and the imbalance was already filled. This is the upper boundary of the fair value gap, which in other words imbalance, and price traded into it handsomely and started moving to the upside. So we know that area could be a suspect area of future reaction, which I scaled down to a much more lower time frame to see what price has actually done, and I identified an order block which I saw price dropping into the order block. and I immediately saw that the likelihood of price to bounce over there is high, because one, there is money above the order block which market needs to trade into and grab, which it has grabbed, and now it needs to start going up because it has drank its juice, should I say, well. So you can see we took the trade actually, and we're buying, though I came to the market pretty late, so I couldn't catch a sniper entry, but we're very close to the area. So I didn't use the stop loss here because I'm making this video with a demo account, so I'm not licensed to give you trade advice. I'm not licensed to show you live results yet, so I'm doing the teaching here with a demo account, so we all can see how nice. If you can do this in demo, you can as well do it in demo. All you need to do is to know what price is actually doing. And yeah, so this is it for today's video, and if you find this insightful, leave a comment below, subscribe to the channel, like the video, share, do all this cool stuff to the video to support the ministry, to support the community, and expect future videos in future time. There is more to where this is coming from, so stay ready, stay all warmed up. Yeah, until next time, good trading.